So the good news coming from today's jobs market release, as you say, was the drop in wage growth, particularly in private sector. Now it dropped to 7.3%, which is still high. But if you look at the underlying basis, so the underlying pace of growth, which is a three-month annualized basis, then it did drop to 4% from 6% before. That's a measure that the BOE tracks, and that points to significant progress because it leaves it closer to the 3% that's consistent with the 2% target. Now, whether it's enough, we don't think so. I mean, the first one is because, as you say, it's still very high levels. The second is that looking at a broader range of metrics, including the decision maker panel survey that the BOE does track, wage growth has been incredibly sticky. And then the jobs market is still tight historically and from the BOE's perspective, because from the BOE's perspective, a 4.5% unemployment rate is the equilibrium unemployment rate. So anything below adds to inflation pressures. And, we're still stuck at an unemployment rate of 4.2% right now.
Anna, we have a chart that shows two-year yields here in the UK near a 6-month low now. We're seeing that price action across gilts as money moves in and yields fall between 9 and 10 basis points across the curve. Again, this chart showing the UK two-year yield near a 6-month low. Does the wage data change your forecasts and the team at Bloomberg Economics in terms of the long-term rate cut view for 2024 for the BOE?
No, not necessarily, because it's just a data point. I mean, there's a risk definitely, and we've got the wage print today was softer than we expected, the economists expected, and the BOE expected, probably, and the CPI data that we got for the past month was also softer. So there's a general risk that the disinflation progress, when it happens more strongly than we expected, and if that's the case, that's a risk to our view. But so far, we don't have enough data to kind of suggest that that's happening. So in our forecast, inflation will still remain very high. It will still be at 3% in the spring. And, the BOE will kind of, only be comfortable, we think, in cutting when it actually sees progress in inflation. And that's only likely to come in the summer. So we're still, for now, keeping our view that, the June meetings to August meetings are kind of the first meetings when the BOE can start cutting.